The easiest way to explain it is this. USDC is basically a digital dollar. One USDC is designed to equal one US dollar. The difference is, instead of your money just sitting inside a traditional banking system, USDC allows dollars to move through blockchain technology. That means faster transfers, easier digital payments, and more financial flexibility. Now, obviously, people should still educate themselves and understand the risks, because USDC is not a traditional bank account, and it's not FDIC insured like a normal savings account. But what attracted me personally is the fact that it combines the familiarity of the US dollar with newer financial technology. Because a lot of people are starting to realize how the traditional banking system actually works. Most banks take customer deposits, loan that money out, make interest from it, and then give the customer almost nothing back in return. Meanwhile, with Coinbase and USDC rewards, users can currently earn around 3.35 to 3.5% APY, depending on eligibility and current terms. Compare that to many traditional savings accounts that still pay extremely low interest. So people are starting to ask themselves, if my money is going to work either way, why shouldn't I participate in some of the upside too? And honestly, I think that's one of the biggest psychological shifts happening right now. Because Coinbase is one of the more beginner-friendly platforms in the space. It's publicly traded, US regulated, and designed in a way that feels more approachable for everyday people. I always tell people, don't start by trying to become some crypto genius overnight. Start simple. Learn what a stablecoin is. Learn how digital wallets work. Learn how to safely move money digitally. Coinbase kind of acts like a bridge between traditional finance and blockchain finance. And for a lot of people, that's a much easier entry point. That's actually one of my favorite parts. Coinbase offers a debit card that allows users to spend their USDC almost anywhere Visa is accepted. And depending on the rewards available at the time, users can earn crypto rewards back from purchases, including Bitcoin. So imagine buying groceries, paying for gas, going out to eat, and slowly accumulating Bitcoin from normal life expenses. A lot of people think you need thousands of dollars to get exposure to Bitcoin, but realistically, somebody could build a small Bitcoin position over time, just from daily spending habits. That changes how people think about money. I think we're moving toward a world where money becomes more digital, more programmable, and more transparent. I don't think traditional banking disappears overnight, but I do think people are beginning to expect more from their money. They want faster settlement, they want better rewards, they want ownership, they want flexibility. And I think blockchain technology is pushing finance in that direction, whether people realize it yet or not. We're still early, in my opinion. I think what Local Loop is trying to do is make blockchain payments feel normal for everyday people. A lot of people hear crypto and immediately think trading charts, complicated wallets, or risky speculation. But Local Loop approaches it differently. Instead of asking people to completely abandon the traditional dollar system overnight, it bridges the gap between traditional spending habits and digital payments. For example, a seller on Local Loop can get paid in USDC almost instantly after completing an order. That means faster payouts, digital settlement, and less dependence on traditional banking delays. At the same time, buyers are still interacting with something familiar. They're buying food, products, local services, same-day delivery, things people already use every single day. So the transition into blockchain technology feels more natural instead of forced. And because Local Loop is built on the base network, transactions can happen faster and more efficiently while still utilizing blockchain infrastructure underneath. I think that's the bigger vision. Not replacing the real economy, but upgrading how value moves through it, making digital dollars usable in real-world local commerce. And honestly, I think that's where this whole industry eventually heads long-term.